Let's talk about payrolls. Stephanie Roth of Wolfe Research saying this: we're looking for 70k on payrolls. Despite being bullish on the economy, we expect significant noise in the report. Stephanie joins us now for more. Stephanie, good morning.
Good morning.
You are bottom of the survey here at Bloomberg, and I think that was unexpected for you, 70,000. So I know you're not bearish. So let's just start with the 70 and tell us what's gone into that. What's the process that you and a team went through? How'd you end up at 70?
Sure, it's actually kind of simple. So the trend in payrolls growth is somewhere around 150,000, right? So that's a decent trend in payrolls growth, similar to where we were last cycle. Then you've got to knock out 33,000 from Boeing. And then our estimate for the payroll for the payrolls impact from hurricane is about 50,000, which is in line with historical hurricanes of the past. So that gets you to something that's pretty weak, even though the underlying trend is just fine.
So claims came out yesterday. They're back to pre-hurricane levels. What does that tell you, if anything at all, about what we might see next week?
Yeah, so you saw about 4,000 increase from Florida. It's possible you'll see another increase for next week. If not, then it might tell you that our number's a little bit low and the hurricane had less of an impact than we thought. But even you had Governor Waller the other day out saying the combined impact from Boeing and the hurricanes could be 100,000.
Stephanie, what if you add in the basic revisions that people now slice off the non-farm payrolls report because we know about the data being difficult and noisy? Say you take 60,000 off. Is that included in your 70? Or if you take 60,000 off, maybe we'll get 10,000 for the NFP?
Well, so one thing to note is that in the revisions, and we saw positive revisions in the last print, we should probably see positive 2-month revisions in the next print as well, because you typically get positive revisions in the month of August and September on both the first and second prints.
Sounds like you think 70 is actually a good number for next week. Is that a good number?
I think it's fine, because if in fact the hurricane number is kind of correct, when we look at the state data and we can confirm it was driven by Florida, then it's totally fine, and the market shouldn't be scared of it.
What's the kind of number the Fed might be scared of? And by scared, I mean sit there and say perhaps we shouldn't cut interest rates by 25 basis points.
I mean, I think they could take Governor Waller's number, 100,000, knock that off the trend. So call it something below 50,000 would really get a lot of attention. The BLS also publishes the number of strikers, so you can easily add that one back.
No, I'm asking what would stop them from cutting at all, not going from 25 to 50. What would make them sit there and say, this jobs market is way stronger than we thought it was. Unemployment was climbing through the summer. We got nervous. We did a big Jackson Hole speech with Chairman Powell, came out and cut interest rates 50 basis points. Here we are, a few months later, 10-year yields are up by 60 basis points, and the 2-month average for payrolls is 200K. Should they be cutting interest rates?
Oh, it's such a tough one. I mean, I think it's really hard for them to not cut in November. In December, it's fairly likely they'll skip. So I think they'll probably just want to see a little bit more data. And then by December, it's very reasonable that they would want to pause for a meeting.
But Stephanie, he's asking for a number. Is it 200,000? What is that number look like?
Yeah, I think it's 200,000.
The line in the sand.
That's probably the line in the sand.
But you think that skip might come in December?
I think it's more likely December than November. But it's fair. I mean, and you should also start to see a little bit of headwinds from an inflation perspective from the hurricanes. That starts to put a little bit of upward pressure in the next couple months.
So your number for next Friday is 70, but as we said at the top, you aren't bearish, you're bullish. So walk me through what you're looking for through year end and into next year. What do these numbers look like for jobs, for inflation, and ultimately for the Fed's landing?
Yeah, so for jobs, we think that the trend is that 150,000. Forget about the next print that's filled with a lot of noise. But beyond that, something like around 100,000. We're looking for soft landing type prints, so inflation roughly around 2%, probably a little bit above, and you'll have a little bit of upward pressure in the next couple months just from hurricanes, so autos should see some upward pressure. That's a soft landing type of economy. We went from over the summer thinking it was hard landing, then the market narrative was soft landing, then it became no landing, and the result is probably somewhere in the middle where it's soft landing. That said, the no landing has probably not run its course yet. We're not quite out of the woods from that.
What does that mean? What does the no landing hasn't run its course yet? What does that mean?
That there's still probably upward pressure on rates in the near term. Combination of election uncertainty, pricing in the potential odds of Trump significantly raising up the deficit, and realistically both sides putting upward pressure on rates. So the no landing, I think, really manifests itself through interest rates. So that's probably where we would see it in the near term.